So, today's video we're gonna go over today's class, I should say. I'm used to recording my fucking YouTube video this morning. Today's class we're gonna go over weekly profiles and how to use them, not only to kind of get your bias and figure out where you want to trade for or where you want to trade from and what you're looking to, your plan of attack, but also to know, what days are likely to give a good expansion and what days aren't. So I'll do just a little drawing for you at first. So you guys have seen me a lot of the times do the power of three, where you see me draw these three boxes. And I think everybody thinks this is some crazy ICT strategy, because they see everybody post it and it's like, this is the candle formation. It's this and this and that, so much stuff. But in all actuality, it's really just the idea of smart money, smart money concepts. That's really what it is. Because all, AMD is what people like repackage it. But basically, so you'll say accumulation, manipulation, distribution. Here, I'll redraw this because usually you want this to be a little shorter. So all this is basically, people call it range deviations. People call it AMD, people, whatever it's called. So I said, can you guys hear? Yeah, I think they, hopefully, should be able to hear. I know player can, and I graduate. Just someone to give me a confirmation that, just because I always, okay, cool. So whenever we're looking at power of three, all this is telling us is that there was basically some kind of institutional involvement. And, what do we look for to get involved trading SMC? Institutional involvement. So if we're looking for accumulation, manipulation, distribution to form on a daily candle, how we have the, the Asian range might be something like this. And then we see during London, we take out liquidity and then expand through New York. Well, all that is, that concept is that saying that there's a lot of volume at the open of a candle. So that's here. So we'll just say this is the open of a candle. We'll just put it like this to kind of help you guys visualize stuff. So let's just say there's the open of a candle. And whether this is a hourly candle, whether it's a monthly candle, whatever, yearly. And you don't even have to think of them necessarily as candles whenever it comes to larger time periods like yearly or quarterly or monthly. But really just the ideology of, if we're going to have a bullish time frame, meaning if we're going to have a bullish day or a bullish month or a bullish week, year, whatever, then we're going to likely form a wick. So if we are likely to be bullish and we're looking for, let's just say the candle just opened, right? Just opened. It's just an infant candle, nothing at all. So what we're looking for, if we are bullish, is to see a big push down, right? So we might have had a little bit of a move up at the open. And now everybody that was really bullish probably isn't that bullish anymore right here. So what's going on right here at this moment, because if we look at this, this is the open, right? But if we look at where we are right here, that's the manipulation. So this is where a lot of people are looking to get short. A lot of people are looking to get involved on the wrong side of the market. And the whole idea of smart money is manipulation and generating liquidity. If the market makers are looking to go long, they need to make people want to go short or scare them out of their long positions. So if there was a lot of long positions throughout here, most of their stop losses are going to be in that range. If you enter in a range, most of the time, if you're on a short-term, trading plan, your stop loss is going to be at the bottom of that range. So whenever the market moves down under here, all these positions are now either stopped out or they're underwater. And whenever breakout traders see the breakdown from a range, they look to short here because they want to see more downwards action. So what's happening is the engineering of liquidity. And again, I'm not saying every single candle that starts out red is going to be a bullish candle. I'm saying that if the bias was bullish, now maybe the bias was bullish because of the higher time frame, maybe the bias was bullish because of structure or the displacement theory that I shared with you guys in my last video. there's a lot of different reasons bias can be bullish. You know, that's your first step. And that's why everything goes back to bias. Because if you're looking for these patterns or these strategies in the wrong context, you're just going to end up, you know, continuously, perpetually fucking yourself, for lack of a better phrase. But when we're looking at the market from the standpoint that we're going to be bullish, we look to have some manipulation because, you know, that's why we have no raid, no trade. So let's just say we have, you know, our level, our whatever it is. Think of fair value gaps, order blocks, breaker, but think of everything. That's just a level. You know, you want to call it whatever you call it. People call it support and resistance sometimes. Literally, I've heard people call it, and that's the same. That's the idea, right? It's just like how people that are trading harmonics, they look at the D point as support. It's like people that are trading Elliott wave, they look at their levels as support. People that trade, you know, visual support and resistance. It's just a level. That's all it is, right? So the order blocks, that's our form of that, right? If you're trading the way I trade, if you're trading ICT, SMC. So we have our level here. And let's say if the market overall is to be bullish. Let's just say the level was formed by some kind of massive breakup. So let's say the market came, oops, wrong tool. Let's say the market came down, made a high, and then we pushed way up, right? Let's just say this level was a fair value gap, right? Whatever it is, doesn't matter. So this level is a fair value gap. Now, we'll say the market came down right over our fair value gap and everybody wanted to get into a trade. Now I know you guys are thinking, oh, there's a breaker right there. Okay, we're imagining here. We're using for explanation or for education. But let's say that the market consolidated and maybe this chart is we'll say this is the monthly chart, right? And there's some massive fair value gap that you want to hit. This is actually just like Bitcoin's chart. So we'll take a look at a real world example right after this. But let's say there's this monthly point of interest you want to hit and it just didn't hit, right? And everybody here is doing what? They're getting long. This is the bottom, right? Because you've had this massive push down. That's what's happening right here, right? That's where all these orders are being engineered. Now, this can happen on any time frame. What we're talking about can happen on any time frame. But right now, we're focusing on the weekly profile. So let's just say we come into a week and we look at, we come into this chart on the monthly chart and we look at this. You're going to see oftentimes a big push down, right? Now, we'll say this is the monthly chart. Now, maybe this was let's just say a sharper push, like the FTX crash, which is going to be the example we use for Bitcoin. So that's what's happening right here. You have this down candle, right? And then if we are to reverse off this level, this candle is going to turn into a big green candle with a massive wick. That's an ugly ass green. Going to turn into a big candle with a massive wick, and it's going to be a lot different. And that is where you have this right here, right? Now, once price or whenever price is reaching for something like this, after we have the accumulation, you know, we have this range bound movement here, usually above a point of interest or a level. And then we have that massive push up. This massive push up was going to something. Maybe it was the highs of this range. Maybe there was some kind of level up here. Maybe it's this high up here. But whatever that level is, once price reaches that, right, we're going to be looking for a cool down, right? Because what's going to happen here, if we have a big candle, sometimes you close them like this, but a lot of times you might move a little bit down and form what? That top wick. So in any period, the first, I'd say the first quarter or the first half is likely going to be creating the wick. So if you're looking to have a bullish week, you're going to want to see bearishness early in the week. If you're looking to have a bullish year, you're going to want to see bearishness early in the year, and so on. I could go down every time frame. And then towards the end of the period, after you've tapped into some kind of higher time frame level, then you're going to look to see some kind of retracement and consolidation for the close. So you'll see something like this. Let's go over here because I'm going to run out of space. So let's say the open, manipulation, big push up, we tap into a level, consolidation for the close. That's just a candle. That's all that is, right? Bars are good to view stuff like this. So now what's actually happening here, and the reason this is happening is you're hitting one drawn liquidity to another. And that's all price is doing. It's bouncing between different levels, different higher time frame price delivery arrays. So, if we're looking at a bearish bias on the week, usually it's going to be going and tapping down to maybe a daily point of interest. And then after that, it's going to tap into some other daily point of interest. In my experience, the first one is usually liquidity. And the second one is usually a reference point, meaning an order block or a level like we talked about earlier. So let's take a look just for this concept to kind of instill this in your mind a little more. Let's take a look at the Bitcoin chart. We'll just do USD to keep it a clean chart. This chart's not clean. There we go. You see how he had this consolidation right here, right? That little move. Forgive my ugly drawings. See how it came right near this fair value gap. Now, let's take a look at it on the weekly to be a little more clear. Make these visible. So you see we had this accumulation. Manipulation. Distribution. Now, maybe this is traveling way higher. We don't necessarily know. I mean, of course, we've talked about for a while now that this is obviously what it's traveling to. And that could be maybe forming the yearly candle. Right? We might see a big push up and then a massive push down because it's, we're still early in the year. But you can look at it, you can conceptualize this into everything from a 1 hour candle to trying to form a yearly candle, right? Now, the idea here is and again, it's just a consolidation in front of some kind of reference point. We move down into so market makers can acquire positions, and then we push back up to mitigate something or take liquidity usually. So if we look at the market from this perspective, and we are able to look at it on a weekly candle and try to figure out how the weekly candle is formed, a lot of times we're going to be able to get a really, really good bias looking for key characteristics to happen on certain days. Now, I did a class on this a while ago on the weekly power of three or weekly candle formation. And we're going to reiterate some of the stuff from there, but I'm going to go a little bit more in depth and show you guys kind of how to use it and implement it more. So the lines you see marked here are separating each day last week. So we open and we form a range on Monday. Now, again, remember, what is the first part of what we've been talking about? Accumulation, right? So what happens here? Now, it's again, this is in theory, this perfect model, that's in theory. Nothing is that perfect. But what do we have right here, right? On Monday, right here, we have just a range is formed. Now, everything to the left, you're paying attention to it. You're paying attention to liquidity pools. But what I want you to pay attention to earlier in the week is just what range has formed, right? It doesn't have to be a consolidation. It could be a big push up, and then you have a range. A range is just a range. Now, if we are looking to have a bearish week, you want to see a high put in on a Tuesday or a Wednesday. Oftentimes going to be driven by news. Now, going back to the title of the class, what days to trade on, right? What days are really good to trade on? And a lot of times it's going to be, what weeks or days to trade on are going to be days that have high impact news drivers. Now, I know you're thinking, what do you mean you're going to trade with high impact news? I'm not saying that. I'm saying that after the news, but those days are going to be very volatile. Those days are going to be the days that you have very good opportunities. So when we see price pushing up, oftentimes into a higher time frame area or a time related area, because if you look at this, what was this right here? Yes, it's buy side liquidity, but it was also the previous week's high. So if we see a big push taking out Monday's high, and you can also mark Monday's high, but taking out Monday's high and taking out a previous weekly high early in the week, you might be able to say that we're seeing the manipulation form. Now, for some of you trying to trade options, and this is something I'm going to be implementing more soon, you can take a very nice weekly or maybe 2 weeks out contract. I would say 2 weeks out because theta's a bitch. But again, I'm playing with that, so don't go just full port that. But this is something for a one trade a week type thing to kind of catch the move of the week. or if you're trading on a personal account. I don't really swing futures like that, but to each his own. But if we come up and we take out a high on Tuesday, right? That's going to be our manipulation. That's going to be this right here. Now, this could be a previous weekly high. There may have been some kind of order block. It could have been anything on a higher time frame, maybe a 4-hour, daily, weekly, monthly, anything. There could have been some level here, right? Or wherever. Oops. Could have been some level up there that price had been tagging into. But our level was this previous weekly high. And how do we confirm this, right? Just like we confirm anything. Displacement, shift, and structure. Now, another trick to kind of figuring out when the market is likely to really start expanding is wait for this whole move to die down. Like wait for a big pivot or another shift in structure to the upside, right? Like this. And once that happens, draw a fib. So I'll add the 1 and the 0 here. So you can see where I drew. I drew it from this low down here to this high. Now, some people draw just the bodies, right? Usually it doesn't really make much of a difference. But if you look here, price made it or left a nice liquidity pool inside of optimal trade entry. So how do we know what days are good days to trade? Again, days that have good high impact news, usually going to be Tuesday through Thursday, oftentimes Tuesday and Wednesday, hence why the high or the low of the week is put in on Wednesday. And again, this can be used for a bullish narrative too. I'm not going to teach a full bullish thing. If you guys, again, that's just something that people ask, like, what about a bullish example? And I almost want to give it, but it's just like I'm spoon feeding to the point where that's going to just, if you can't inverse stuff, like understand that this is a numbers game and understand that a bearish example is the same exact thing as a bullish example, then you got to work on that before you can, me giving another example is not going to help you. There's a little mini rant, but we understand that we've taken out liquidity on a Tuesday. Now this could have happened on Tuesday or Wednesday. Once this happens, this is going to be very, very probable this is going to be an expansive day, right? And we have our bias because price is taking out and attacking the buy side and Monday's high. We've taken out previous weekly high. We've taken out Monday's high, right? So these are the days you're going to be looking at as very high value days. Now on Wednesday, right here, this was kind of a fickle day, right? Now, what we could have waited for is that return back up to optimal trade entry, right? But we didn't have the same levels at that point. We had this right here. So let's just say on Wednesday, you just didn't get that. Now, I'm not saying you couldn't have traded Wednesday, but you're in kind of no man's land. You're out in the minefield. You're just kind of, are we going to keep expanding? Are we going to, as far as this strategy goes, I'm not saying you can't get good trades. I'm not saying, I think we actually took winning trades on Wednesday. We did. So I'm not saying you can't trade, but I'm just telling you guys the most high probable scenarios for massive expansions. But once we bottom out and we form that market structure shift to tell us to go back up, this can tell you, like if this happens, that can tell you, hey, the market is now going to go back up to optimal trade entry. And the way that I came up with teaching this class to you guys this week was because I was reviewing a loss that I took on Wednesday, right? We took a loss together at first, and then we took a nice we had a nice sell after we took a loss, and the market ended up expanding rapidly. But I was looking at it like, okay, because my bias was that we were going to go for Monday's low right here, but I realized and really went back and analyzed it and came up with, kind of refresh my mind with all this. So that's why I want to share it with you guys. So instead of taking that short, even if we one-on-one, we could have had a way more expansive trade by being on the correct side of the market. So market shifted up. That can tell you this is going to be an expansive day because it's already Wednesday. If we're going to have a bearish week and this is the low, then we know that after we tag into this, we don't have a lot of time in the week to expand down. So we have to go back out now. Let's go to the daily because, again, let's just kind of rephrase because it's a lot. We're going to have a bearish week. We have a high of week put on Tuesday. What are we expanding towards? Now, there's a daily order block marked right here. If you look on the daily chart and just look for the nearest price delivery array. Remember, you guys know I love low-hanging fruit. What's the most obvious area? This order block. Now, on the daily chart, I want to use bodies for order blocks. I really like use them a lot of times on any time frame except like 5 and 1 minute. But again, when you're up here on Wednesday, right? This is Wednesday's candle. You're going to be looking for, okay, well, if we're going to be bearish, where are we going to be bearish to? The next daily price delivery array. So if we haven't tapped that, and it's already Wednesday, and Wednesday is telling you we got to go back to OTE, once you get up to OTE, you know it's game time. The market's going to shit. The market is going to expand very, very rapidly towards that daily order block. So you would know that after this hits, you're going to see a very, very massive move. Now, if you notice on Thursday, coming in as soon as midnight open, massive dump down, and then once we came into the market that day, we hadn't tapped into this order block, and then the market massively tapped down into it, right? So you would have known that Wednesday and Thursday, after this had been tapped into, those would be very high volatility trading sessions. Let's talk about Friday. So we'd already tapped into the daily order block, right? So now what? This is what? Does that look like very massively profitable trading conditions? Maybe. But does it look as good as this or this or this? No, it doesn't. It's not expansive. And as day traders, we want that big push on the day. I mean, do you like trading days where it's just chop and you just move, ES moves, $20 the whole day? Fuck that. You don't want that. That's where you start losing money. We want days where the market's moving very rapidly, because the good thing about these days, which is what I talked about a little bit in my video I put up today, is that if you do lose, your bias can quickly be shifted and you still have room to make money because there's still a range that's going to be created. The market is going to be pushing or it's going to be shitting on those days. So these are the days that you have to be aware of this and say, okay, I took a loss real quick, this, that, and the third. I got to get back in the game, understand where we're going, because this is going to be an expansive day. Now, again, this is also a double-edged sword, because if you're thinking that and you're not getting what you want, you might start fucking up and doing stupid shit because you're thinking, oh God, this is going to be an expansive day. I got to make the most out of it. And again, that's going to come with just a good mindset, kind of being aware of yourself and aware when you're making decisions, being like, am I making a stupid decision right now? The more mature you get as a trader, and really just in general, or mentally mature, is when you're able to, like, every action you make, if it involves any kind of important outcome, you're going to second guess yourself, and you're going to kind of think, you want to play chess, right? Not only, first consequences, but second and third consequences, and also be aware of why you're making a decision. So that's just food for thought there. But understanding the weekly bias, understanding, okay, what did Tuesday do? Tuesday and Wednesday are going to be very telling, right? Now, I'm not saying if we put a high in on Tuesday and we have a shift, it's always going to work. I'm not saying this is a be-all, end-all. I'm not saying that, right? What I am saying is if you pair this with other confluences, it's going to work a lot of the time. Now, this doesn't always have to happen on Tuesday. Sometimes it's going to happen on Wednesday. Sometimes it might happen on both days and it might not work. So don't think that this is just like the holy grail and I gave you guys the secret to making money and all this. But understand that once you get a feel for it, you'll know. And that's why I was talking about, I don't know if you guys were at the Twitch stream or on Thursday's stream, whenever we got stopped out a little early, and then I ended up taking more trades, but I was very confident we were going to go down to that daily order block. And so these are how, because I get a lot of questions recently, like, damn, like, how do you get just shit on, stopped out, and then you just keep going? Like, you keep going. And like, for example, on Wednesday, whenever we got stopped out on the first short and then I went back in again, now obviously, like I said, we could have been getting a bit bigger of a move, or a lot bigger of a move, but the mental, or the mindset behind that is just being, very confident in what you're doing and not being afraid to be wrong. And this kind of stuff is how I do that, is developing these bigger picture biases, these things where it's reasonably, or where I'm reasonably confident, which means I have a logical, basis in my head formed that I'm going to be confident. It's just like back testing. If you're going to be trying to be confident in your system, but you've never back tested it, then like, what are you trying to do? That's like saying like, yeah, I'm confident for no reason. Like, I'm confident. That's just dumb. There's just no way. And your brain knows that. Like, if you say you're confident in your system and you've never tested it and you're not profitable, you're not confident in your system. There's no way you are. because your conscious is going to tell you like, yo, like you really don't know. So chill, you know, don't take the trade, don't follow it. But stuff like this can really help a lot with that. That's really it for today. You know, I could continue to beat on a dead horse. It seems like we covered pretty much all the bases I wanted to go over. I know it was a little shorter than usual, but the value's there, and I think that it's better to be concise rather than to spread things out. So if you guys have some questions, I'm sure maybe there's some, hopefully, just let me know. While I'm waiting for you guys to ask questions there, I'm going to go over to Bitcoin, and I'll start to kind of we'll see if this trade works out. And again, I posted this one, and it's a total lotto. I'm not risking much at all on it. And I'll go over why I want to take this trade. Now, whenever we're talking about market maker models, and you know, we already are bearish, or I'm already bearish at least. You know, obviously we've pushed a big area down, but the 4 hour to me is still displacing down. We have taken out a lot of equal lows, but for how is my bias in the coming week on NQ and ES? Let's take a look at ES. I'll just do this. First off, let me delete all this shit because I have so much shit. And just to start off, like we've been talking about in this entire time, the best way to do that is to wait for Monday's range to be manipulated. But I'll take a look at the higher time frames and let you know a little bit of what I think might happen, because I haven't even looked. Like a lot of people, they'll be like, do like a Sunday markup. I don't understand that. I don't get that. Like I get it for marking levels, but like if you're trying to trade ICT, that's just completely against, you know, really the logic that of time and price, because you're basically cutting off using Monday's range. But I'm trying to delete this without deleting all my other drawings. What's the... All right, so first off, let's look at the weekly. Last week closed bearish. We have get this gone. We've got a breaker, or no, I'm sorry, that's not a breaker block. Actually, I mean, one could look at it as a breaker block. I've been watching ES more. I'm sorry, not ES, but NQ more. I'm gonna be safe, play it safe, and watch this fair value gap overall. Now, we haven't had a massive shift in the daily yet. So the two things I would be waiting on, for one, remember we just traded into a daily order block, right? This daily order block didn't really give us any kind of substantial shifts in structure, except, I mean, you know, you kind of took out some highs here, a high here. ES has been really choppy. If we look at NQ, on the other hand, let me put these on my object tree as well. So if you look at NQ, the overall displacement range is bullish. It's a little bit cleaner than ES. So we'll go over this one. Price came down, took out liquidity in a discount, barely tapped this fair value gap, right? Left an order block, right? So look at the 4 hour. We have a little bit of a big push up. 1 hour doesn't really have much, any kind of movement here as far as a shift in structure. So I would be leaning bullish, right? But again, to try to catch the bias right now is kind of redundant. You know, you want to make sure that you wait for the Monday's range to be manipulated. So what I would be leaning towards would be bullish, right? Because I would like to see maybe consolidation, take out this low, maybe even into this fair value gap, and then move up. But again, maybe it's going to take longer to get down. Maybe this fair value gap's the draw. Maybe it's going to take longer, and we might end up having a bearish week, and we might see some manipulation up early in the week. Again, it's just kind of, you know, you want to make sure that you're just plotting out levels and watching, because, okay, we have a volume imbalance here. That's a level we could maybe see manipulation of the upside in, then trade down into previous week's low or this fair value gap. Or we could trade down into this and then trade back up into that. It's more about reacting based off of the weekly profiles we just went over, instead of trying to predict what the weekly profile will be in before it happens. So I hope that helps. But, you know, things to keep in mind. We're in a bullish displacement on the daily. Why isn't this mic stand staying up? Hold on. Sorry, I had to tighten my mic stand. We're in a bullish displacement range on the daily. We have traveled into discount. Lack of a displacement of these highs. So that would give me, reason to believe we're going to go here at some point. I don't know if it's going to be early in the week or next week at all. So hopefully that helped. On the Tuesday stream, we'll be able to go over that a little bit more in depth. For Bitcoin, the reason that I'm going to try to take this lotto short, because I look at this and I see a market maker sell model, right? And I also see a lot of liquidity building up above these highs. And if this is going to be a distribution right here, we've taken out the lows and there's a nice shift here, right? We came down here, took out a low, failed to displace under it. And there was a decent shift right here. Barely pipped this high. The reason I picked this high is because it was the highest high of the range. So if we're going to play a market maker model in the second, the first distribution, I'm sorry. I don't know why I said second. It's the first distribution. You want to see a big push up and take out the high of the range and get something like this. And that's going to usually give you an expansive move down to this area right here. But again, it's trying to catch we're basically setting a limit on liquidity. So we'll see how it plays out. It might not even get back up there. Now, the 4-hour trade was literally that. It was a 4-hour trade. I looked at it like, okay, here is the overall bearish impulse range. Price came to a nice premium, almost filled the 4-hour fair value gap in full. I think that if this goes higher, my trade idea was wrong. And we've already made a shitload of money off longs, right? Like sellers paid us a shitload. We still have this in profits. We didn't get 43. It was just 43 at the top. We got 26 or around 25%. I don't know, 26. VRA gave us nice profits. It's a little in drawdown now. ETC gave us really nice profits. Trim some. Now the remainder is a little bit under where we're at. So I looked at it like, okay, we've got some positions open. Let's go ahead and open up a hedge. And what better to open up a hedge on, in my opinion, if the market's gonna go down than Bitcoin. I kind of wish I would have done this sooner, but it is what it is. So that's my idea for crypto right now. And again, we talked about this weekly breaker a long time ago, and this is really the last weekly zone. And anytime you see these little taps in a fair value gaps, that usually ends up getting tapped into again, in my opinion. Now, we'll see. Again, the daily structure is still kind of bullish if we look at it like that, but that's the game plan that I like moving forward. Okay, Euro, I want to see how we open up on this nice push after right before the close for the weekend. So we'll see how that opens up. I'm going to also keep an eye on USD CAD coming into the new week. We got stopped out on that trade. That idea ended up just being completely wrong. Gold is another one I'm going to watch. I thought we were going to move up higher, but ended up shitting a lot. So I think we might end up taking out these lows, but I still think this is going to go move higher in the future. And some other trades, some total lottos, but Oxy and Exxon. Exxon's got earnings up this upcoming week. But I think that these oil stocks I think it's a natural gas or petroleum stock. Yeah, no, it's not natural gas. I'm sorry, an oil or petroleum stock. But I think this is a really nice setup on the weekly. And the reason for that is took out these lows right here, relatively equal lows, market structure shift. Price trading back down. Not into premium yet, but we have a breaker right here. I can draw right. So we'll see how that goes. How about DXY? DXY is still following what I wanted it to. It's just a little choppy. We traded this daily order block. Look at the 1 hour. It's just been nothing but this range bound shit. But we keep taking out buy side and then expanding down. So it's not really giving us these massive moves like I'd like. Again, we still haven't taken out this low. So we could just see more chop. Until we get massive displacement on the 1 hour, it's just chop. The way I look at it though, until the daily shifts bullish, my system's not going to let me be bullish. I can see the bullish idea. Like, yeah, we took out the low. I can see that we failed to displace under this level. So we could go up here, but when I look at the most recent impulse, we displaced pretty hard under that level. And then on top of that, if we look at the weekly, yes, we took out the sell side right here, but look at all the other stuff we have down here in a discount. And everybody wants to be bullish in the dollar. But again, kind of got to wait for this one to play out. This is a really choppy chart in my opinion. Would lean bearish though. Because if I look on the weekly, well, let's go on the monthly. You know, you've got this fair value gap that you are trading inside. You barely pip this low, but until we get a daily shift, I'm not going to really consider that a reversal. So anywhere in this zone right here, you know, and if we want to refine that more, you have a fair value gap down here that you're trading into. So again, we're in that zone where you could reverse and could start going bullish, but I want to see a daily shift in structure before I call one of those really long-term higher time frame reversals. And at that point, it's going to be yeah, the market. We'll see how that goes. QQQ. Yeah, that's the NASDAQ. That's one we just went over in a second ago. It's just going to be the ETF. So it's similar to the NQ chart we just went over. The reason that I got those lottos for this right here, just simple. Fail to displace under this. Traded into this fair value gap. Again, taking out liquidity and massive shift on the weekly. So that gives me a bullish draw on liquidity. Also, if we're going to have a bearish year, just like we talked about earlier, I want to see bullishness early in the year, which would give us that target hopefully getting hit in the first or second quarter. That's why I got the June 16th calls, but we'll see. On that note, guys, I'm going to hop off here. I got to get my daughter back to her mom's house. So I will see you guys on Tuesday. I actually have a pretty dope thing that I'm going to announce tomorrow. I'm going to be doing a co-stream with a pretty well-known person in the crypto space. I think you guys will be pretty excited about it. But that'll be announced tomorrow. It'll be on Tuesday. And then we'll have the normal Tuesday, Thursday, Sunday classes. So yeah, awesome. I appreciate you guys. I'll post this up to the YouTube, to the private playlist. And if you guys have any questions, you guys know how to reach me. Peace.